Hi, I'm Rick Kaler. Thanks for joining me. The new Trump account, also referred to as Trump bonds or MAGA accounts, is being promoted as a game-changing way to help American families in the One Big Beautiful Bill. Now, here's how it works. Every child born between January 1st, 2025 and December 31st, 2028 gets a $1,000 deposit from the government. Parents and family members can add up to $5,000 a year. And if parents don't sign up, the account is created automatically. Now, on paper, the idea sounds promising. The stated goals are familiar. Give every child a financial foundation, encourage parents to save early, and help close the wealth gap between families who have resources and those who don't. Proposals like this have been around for years, with supporters on both sides of the political aisle. But if you look beyond the headline, the Trump account comes with a host of problems that make it a questionable solution for families who truly need help. First, there's the issue of tax benefits, or the lack of them. Unlike a 529 college savings plan, Trump account contributions are not tax deductible. The money can grow tax deferred, but withdrawals are not tax free. In fact, any money taken out, even for the approved uses, is taxed at capital gains rates. If you take the money out for anything other than college tuition, a first home, or starting a business, you get hit with a 10% penalty on top of regular income tax. On top of that, access is strictly limited. Only half of the money can be withdrawn at age 18 and the rest at age 31. Now that's a lot of hoops to jump through with very little tax advantage in return. Second, the Trump account is a textbook case of government overengineering. The rules are complicated. The penalties are harsh. Families have to track deadlines, approved uses, and a long list of restrictions. If you make a mistake, you pay a price. For many middle and upper income families, the hassle just isn't worth it. For families with lower incomes, that $1,000 government deposit is welcome, but it's just not enough to make a meaningful difference if there's no ability to keep contributing. And if the account balances are small, they could be eaten up by fees over time, which would leave little or nothing for the child's future. Third, the Trump account doesn't actually fill a gap in the marketplace. Better tools already exist. Take the 529 college savings plan. You get tax-free growth and tax-free withdrawals for education, and there's a lot more flexibility on what you can use the money for. Tuition, books, computers, even some room and board. Or consider a Roth IRA for kids with earned income. Contributions can grow completely tax-free, and money can be withdrawn for retirement, education, or even a first-time home purchase without penalties. Behavioral economists and financial planners have long pointed out that savings plans only work when they're easy to use and when the incentives are clear. That's why programs like the 529 and Roth IRAs have succeeded. They reward families for saving, and they don't bury the participants in red tape. The Trump account, by contrast, brings back all the mistakes of the old government programs. That is complex rules, limited flexibility, and penalties that can wipe out any benefit for the people who need it most. So here's the bottom line. The intention behind the Trump account, helping children build wealth and closing the opportunity gap, It's a worthy one. But the way this product is structured does more to generate political headlines than to solve real financial problems. The signature feature is a one-time $1,000 government deposit and a complicated web of rules. It's a flashy announcement that does little to change the long-term prospects for most families. If you want to give your kids a genuine financial head start, focus on proven strategies. A 529 plan, a Roth IRA, or an expanded child tax credit offers real tax advantages, practical flexibility, and fewer headaches. The Trump account, at best, is a financial dinosaur. A definitely irrelevant, needless offering. A dino. It belongs in a museum of policy experiments, not in your child's financial plan. Thanks for listening.